Lomesh, I mean, we heard about it. I think the internet computer vision is even a bit bigger. The big differentiation, what I always learn when Dom is talking is, look, not trusting on anyone. There's no AWS, there's no Google Cloud. It's fully in the internet computer. Do you think you can handle that, this complexity, this additional one? No?
Absolutely. So let's take an example, right? So yesterday, the whole crypto Twitter was like on fire when MetaMask was essentially pulled out from App Store. Now, MetaMask says it's because of our own mistake, and that may be okay. But basically, what that told everyone is that centralized parties, Apple, Google, Chrome Store, they have the power to pull MetaMask out, and then like, what happened to all your assets? Where are all the private keys, right? So the more you rely on these central parties, the more trust you are putting in, which means that there is a potential to censor that by the governments. There are people in those organizations who can kind of screw things up, right? So at the end of the day, we need to. So what Dom presented was this OIC wallet, right? So this is a prototype where we show how you can own not just smart contracts on internet computer can not only hold ICP, but it can also hold other assets like Bitcoin and Ethereum completely in a browser without downloading anything. So your TPM chips on the phone are the ones where you store your private key, and you can essentially build the entire interface of a wallet, and you can essentially store all assets. So yeah, I don't think that there is any other alternative on how we think about it. It has to go completely decentralized with no intermediary, no centralized party. I don't think that there is any other alternative on how we think about it. It has to go completely decentralized with no intermediary, no centralized party.
Alrighty, what is going on, everybody? Welcome back to another CyberX video banger. In today's video, it is going to be one of the longer video breakdowns, but again, if you all are interested in accelerating in your trading career and actually learning something of value, make sure that you stick around for the entirety of this video breakdown. We're going to be talking about why understanding fundamentals as a risk asset investor is extremely important. We're going to be going down the rabbit hole, going back in time, showing you all how we had been talking about some things surrounding the strength of the United States dollar and the overall US economy, and how that could drive some attention away from risk assets, driving demand back for the US dollar, and how that has affected the market so far. Particularly focusing our attention on some ICP targets that we had called out coming into fruition. We're going to go over that, some technical analysis plays on ICP, internet computer. I'm going to give you guys my next dollar cost average levels via the charts. And then we're also going to cover some fundamentals surrounding the US dollar, how that negatively has impacted the overall risk sentiment in pairs like GBP USD. So if you enjoy video breakdowns like this, even if you're not a day trader, just staying in the loop with these fundamentals and how it impacts risk assets as a whole is extremely crucial for your survival in this market long term. So make sure that you stick around for the entirety of this video breakdown. And if you learn something of value, make sure that you do us a favor, smash that thumbs up button and subscribe. With that being said, sit back, relax, let's head over to the charts and break down these fundamentals that we have been covering for quite some time on the CyberX platforms. Alrighty, everybody. So I'm going to attempt to try and make this video as short and as sweet and straight to the point as possible. So we're going to initially start here with these potential bearish targets for some dollar cost average positions on internet computer at around $11.50 and $11.25 potentially coming into fruition. And I will go over this in just one second, but I want to take your attention back in time to this post that we put out back on December 27, 2023. So I hope that you all have been paying attention. And I said, things that you all should be paying attention to as a crypto investor. Why has the market mood been so bullish? Risk on market mood. I talked about the Bitcoin halving and the Bitcoin ETFs, obviously, of course, driving some hopium and some bullish demand. But aside from that, the market was pricing in an 88% chance of rate cuts early March next year. Remember, pay attention, take notes, and understand that this type of information will help you long-term in your investing and trading career. So pay attention to any shift in this sentiment. Global central bank stance on monetary policy, Fed comments, dovish, hawkish, most recently when, and at time of writing this, they were dovish, which drove demand for risk tolerance, hence the increase in crypto prices at the end of 2023. Any hawkish comments would weigh on risk sentiment. I also mentioned US inflation. Any data or any uptick in inflation would not be good for risk assets and would weigh on the rate cut narrative and bring back interactions from the Fed, i.e. rates higher for longer or possible hikes. Labor market data. Any positive turnaround in labor market data would signal strength remains in the US economy and bring dollar rebound. These are just some things to be paying attention to. As risk asset investors, what we would want to see, I mentioned to you all, is dollar below 102.8, inflation continuing to cool, and labor market continuing to see cracks from higher interest rates. If any of the above changes, get ready for a pullback in digital assets. So I mentioned this to you guys all the way back December 27, 2023, last year. And now fast forward to this year, these are all updated fundamentals. What are we seeing? A change in that sentiment where we're seeing here. US dollar strengthening following impressive labor market data. I mentioned that that was one of the things that we needed to be paying attention to right here, labor market data, right? And then even here, hawkish Fed comments about interest rates trajectory strengthens US dollar. What did I mention in this previous tweet or in this previous post, right? Any hawkish comments? I said right here, Fed comments flipping from dovish previous comments to hawkish would most likely weigh on risk sentiment. And then obviously, of course, the Fed rate cut narrative fading out of the market. Here you can see a whole entire fundamental post talking about how rate cuts most likely are not on the table and unlikely in March. So every single thing that I gave you all back in December to be paying attention to, fast forward, has now come into fruition, which has weighed on the overall risk on market mood. So again, this just goes to show the power and the value that we are attempting to provide for you all here. I get that this stuff is not fun. This stuff is not absolutely exciting because I'm not sitting here behind the computer telling you guys that your bags are going to pump or that we're in a freaking massive bull run cycle. It's not like the other video breakdowns where I give you guys crypto related information and I give you guys little tiny video clips of these panelists saying the most bullish things ever. But this is what drives the market right now. This is what drives these fluctuations that you're seeing in your portfolio. So you should be paying attention. So that leads me to go on to talk about why I was giving bearish targets on particular assets like ICP, and how we've been paying attention to this stuff, taking profit here at CyberX, some call outs that we've made in the private group chat. So let's head over to Internet Computer and break this down for you guys, what I'm currently looking at and some things that we've talked about in the private CyberX community. So let's go back in time just to show you guys how accurate, number one, that these deltas are that we have access to via our institutional scalper. Back on February 2nd, 2024, at roughly around 3:14 a.m., you can see this screenshot that our institutional scalper sent us via some sell deltas that we should be paying attention to, particularly on Internet Computer. Now, he gives these deltas on multiple different cryptocurrency assets, but again, you have to be part of our private CyberX community to have access to them. So let's focus our attention on ICP. Here you can see this is the screenshot from February 2nd, where you can see up here in this area, the general vicinity of around $13.45 for some potential profit-taking opportunities on ICP to come back down and re-implement that capital at these lower buy levels. Fast forward the day after on February 3rd, you can see that ICP came up into that $13.45 range. We had a manipulation zone created, and then ICP started to sell off. This, significantly enough, was the same exact day that the dollar started to increase in value yet again. So paying attention to this stuff is absolutely crucial. From the time of sending that specific analysis to the CyberX community, here you can see this is where price action was at on February 2nd. Right here on ICP, hovering roughly at around $12.50. The following day, given that update to the private CyberX community on February 3rd, this is where price action was at. Now, overall, in the private CyberX analysis, where I give my personal dollar cost average levels, you can see this previous message sent at a top on February 3rd at 12:07 p.m. on Saturday. So again, going over to the ICP charts, you can see, look at the time, right? This is important. You need to be paying attention to influencers that show you timestamps. If they can't show you timestamps and they can't show you where they're putting this valuable information out to you all, it's irrelevant, okay? February 3rd, I said to the students, ICP, I'm looking for dollar cost average levels below $12.50. If we head over to the charts, look, February 3rd, giving that information to the community at a top. Why? Because we already had the sell levels on ICP where we should be taking profit from. See how that correlates, right? So on February 3rd, taking profit on ICP, I was looking for capital reimplication underneath $12.50. And you can see as of time of recording, price is now underneath $12.50, operating at about $12.30. So could I decide to plug some capital into ICP? Absolutely. I've been implementing capital underneath $12.50 every single chance that I can. However, what I'm personally looking for and why I put out these bearish call outs at around $11.50 to $11.25 is if you go look at the previous areas of interest on our delta zones here, you guys can see the psychological levels. If we were to correct this entire previous bullish move, would come into roughly around $11.50 to around $11.27. So where I will be looking to plug capital into the market if we do decide to correct this previous bullish move, considering the recent strength in the US dollar, the optimistic US data, the more hawkish Federal Reserve, and the rate cut narrative fading off the table, potentially continuing to weigh on risk assets, what I'm looking for is for this previous bullish move to be corrected on ICP and for us to get some opportunities to reallocate some capital where we were taking profit up here at these highs on February 3rd. Roughly looking to draw our Fibonacci again to gauge discounted price from this previous higher low up into the high, looking at something like this from the low to the high to get some potential buying opportunities down here in this level. However, again, taking into consideration that a 50% correction from this previous bullish move has already happened, which is why now you all can see that telling the CyberX private community members with our dollar cost average levels that we should be looking to reallocate capital in ICP as long as price is below $12.50. Why? Because that is where we meet that 50% correction threshold where price is from the previous bullish run that we saw on ICP hovering at around $11.50 up until about $13.50. We've now seen the move at least do a 50% correction. So now we know that even if we're allocating capital into the market here, we're still not buying at a top. So this just goes to show the power of understanding fundamentals, risk on, risk off market mood, tracking this information and showing you all via timestamps, right? Back on December 27th, we told you all to be paying attention to the sentiment that if we see dollar back above these specific psychological levels with supporting fundamental factors, that most likely that was going to create a risk off market mood. And now we're seeing all of those fundamentals come into fruition. So hopefully you guys have been taking advantage of that. That's ICP in a nutshell. I'm looking to reallocate some capital into ICP. Obviously, of course, as long as price is below $12.50, I would like to see price come down into the low $11 range. However, that is not guaranteed. So taking initiative now would be sufficient, but I'm patient and I can wait a little bit longer. If those price levels come into fruition, I will reallocate some capital. If not, I have buy limits set where if we do surpass the $12.80 range and we continue up from here, I will reallocate that capital into the market and just simply buy it roughly around $12.80, which is still roughly around that 50% correction area from this previous bullish move. So I'm waiting patiently. I have alarms set roughly at around $12 to see if we can get that drop or that decline on ICP and continue dollar strength to come down into these lower $11 ranges for some capital reimplication before price goes back to the upside. That's what I would like to see overall. Again, just ICP in a nutshell and my dollar cost average strategy, showing you guys where we put these levels out to the CyberX community, where we tell them again that we are taking profit and why we are reallocating capital back into the market considering previous bullish moves and dollar cost average levels. So ICP in a nutshell, let's head over to the overall fundamental breakdown and the weekly recap that we gave the CyberX students, keeping them in the loop with dollar strength. Again, smash that thumbs up button if you're seeing value in this content and this information that we are providing. This is the full fundamental breakdown that we gave the CyberX community to give them an overall recap of why the dollar has been so strong. So I said last week, the US dollar exhibited an increase in strength fueled by hawkish sentiment from the Federal Reserve, continuing the prevailing narrative of rate cuts not taking place in March. The week commenced with a positive turn in consumer confidence, reaching its highest level in over 2 years at 114.8, according to the Conference Board survey released on Tuesday last week. Simultaneously, U.S. job openings unexpectedly rose to 9 million in December, a 3-month high, indicating a robust labor market and robust economic growth, particularly in professional and business services, which is again highlighting something that I told you all to be paying attention to here in this previous tweet back from December. Now, as the market awaited the FOMC release on Wednesday last week, early dollar weakness ensued due to downbeat ADP non-farm employment change, employment cost index, and Chicago PMI readings. However, this weakness was short-lived as the FOMC release and Jerome Powell's statement emerged, maintaining unchanged rates at 5.50%. Powell emphasized the Fed's commitment to combating inflation and bringing it down to 2%, challenging expectations of a March rate cut, which again is something that I told you all to be paying attention to, is rate cuts fading out of the market. Now, moving on, I go on to say, initially, the market expectations reflected a 65% chance of a rate cut, but post-release of the FOMC announcement and statement, the odds dwindled down to 46% as per the CME Fed Watch tool. During the post-meeting press conference, Powell firmly rejected expectations for a March rate cut, leading into intraday strength in the dollar and ending the New York session positively. Thursday, we witnessed some labor market weakness with initial jobless claims increasing to 224,000, but the dollar rebounded after upbeat PMI figures, indicating a 15-month high in U.S. factory activity. Closing the week on Friday, the dollar strength persisted with an outstanding jobs report. The Bloomberg Dollar Spot Index surged by 0.7%, propelled by remarkable January employment reports. Payroll rose by 353,000, surpassing the consensus and forecast of 185,000, which is extremely optimistic. And the unemployment rate remained steady at 3.7%. The data showcased the resilience of the labor market and the broader U.S. economy, providing a positive outlook for the White House. In summary, the U.S. dollar concluded the week on a positive note, reclaiming strength amidst a robust economic set of indicators. So, showing you all the importance of understanding this information just to solidify everything that we've been talking about. Powell reiterated this during the interview, saying that in the interview talking about the 60-minute interview that took place last night, saying that the Fed was still waiting for good evidence of economic strength before it could consider rate cuts. He said it's not likely this committee will reach that level of confidence in time for the March meeting, which is in 7 weeks. Powell said, adding that almost all members of the Federal Reserve Board believe that cuts will occur sometime this year. It's most likely going to happen at the end of this year is what I'm personally expecting towards the end of Q3 as we head into Q4. It would be interesting if that all took place around the same exact time that more regulations came into fruition for the digital asset space. Hint, hint, right? Funny how that's all planned out. We just want to see some more confidence before we take that very important step of the beginning to cut interest rates. Rate cuts are considered bullish for risk assets such as cryptocurrencies and growth-oriented tech companies such as Apple, Nvidia, and large tech stocks. When the Federal Reserve cuts rates, borrowing capital is cheaper, which typically increases overall spending activity and risk appetite in the broader economy. So I wanted to end it there for you all. Again, why we've been telling you all since December to be paying attention to this, why we're confident giving you all bearish targets on particular digital assets that we are personally investing in. Even if these ones don't come into fruition, we told our private community that we were going to be dollar cost averaging into ICP and the rest of these digital assets at these particular psychological levels. You guys have direct access to all this information by joining our CyberX monthly Discord server. The link is in the description down below, or you all can just visit cyberxtrading.com. Hopefully you enjoyed this video breakdown.